Welcome to the Deep Dive, where we cut through the information clutter to give you the clearest picture fast. No information overload here, just the crucial insights you need. Today, we're plunging right into the heart of a really pivotal moment for a major player in the automotive world. We're going to unpack the recent AGM meeting of a company that isn't just building cars and trucks. I mean, it's actively shaping the future of mobility, both in India and globally.
That's right. You've given us quite a stack of their latest reports, the investor presentations. Our mission today really is to distill all that, highlight the strategic moves, the tech leaps, and the financial health that's going to define their journey ahead. Think of it as your express lane to understanding what really matters from this crucial meeting.
Exactly. So if you're curious about the future of EVs, or maybe the complex dance of global supply chains, or just how a massive automotive group is navigating this, rapidly changing world, this deep dive is definitely for you. Okay, let's unpack this. One, a bold restructuring for the road ahead, the demerger. Okay, so every titan of industry, right, eventually faces a moment of, let's call it reinvention. For this company, that moment looks like a pretty seismic restructuring, splitting their massive enterprise right down the middle. This isn't just corporate shuffling, is it? It feels like a bold bet on extreme focus. So what's the vision behind this two-way split, and what's the latest on it based on the meeting?
Right. So based on that recent AGM meeting, the board has approved what they call a composite scheme of arrangement. Now, that's basically the legal blueprint, to divide the company into two distinct, separately listed entities. One for commercial vehicles, it'll be TMLCV, and another for passenger vehicles, TMPV. And this plan, it's been filed with India's National Company Law Tribunal, so it's formally in motion.
That sounds like a huge undertaking. But the big question is timing. When can we expect this demerger to actually be completed? And is there a precise timeline for these two new companies hitting the stock market separately?
Yeah, that's the key question. The materials from the AGM, they don't actually give a hard date for completion or the listing, not precise dates anyway. But the why behind it, the strategic rationale, that's crystal clear. It's all about unlocking, enhanced focus, agility, and creating significant value for both businesses. The idea is that by letting each entity pursue its own growth path, driven by, say, greater customer focus and innovation, they can tailor their strategies much better.
Right, specialization. So does that mean things like better capital allocation, maybe attracting different kinds of investors for each part?
Precisely. Yeah. That's the core idea. Each business gets unburdened by the other's specific challenges. That could lead to more targeted capital spending, And it definitely makes each one potentially more attractive to investors who want, say, pure play exposure to either commercial or passenger vehicles. It's a move designed to, unleash two distinct powerhouses. The full financial benefits, they'll unfold over time, but strategically, it's a big play for long-term value. 2, driving towards an electric future, PV and CV electrification.
Okay, let's shift gears. When we talk future of mobility, you absolutely have to talk electrification. It just dominates the conversation. And JLR in particular seems to be making, massive strides here. What are the plans for new EV models and ramping up production?
Oh, absolutely. JLR is deep into a huge transition to battery electric vehicles, BEVs. It's all part of their reimagined strategy. The first fully electric Range Rover, that's set to launch soon. And alongside that, a new 4-door GT Jaguar BEV. Both are slated for 2026. And this isn't just talk, right? Their Halewood facility, it's seen a massive $500 million investment specifically to transform it for the electric era. Plus, the Solihull plant is now geared up to build pure electric Range Rovers. That shows the flexibility of their modular longitudinal architecture. The ambition is seriously impressive. They want a pure electric version of every JLR brand by the end of the decade.
Wow, that's incredible scale, serious commitment. But what about the Indian market? It operates quite differently, doesn't it? And how are they tackling that huge challenge of battery supply, especially with, all the global complexities involved?
Right, India is a different beast. The focus there is squarely on getting rid of the barriers to EV adoption. They're even managing to achieve pretty impressive price parity between some of their new petrol or diesel models, the ICE ones, and their EV counterparts. That's a big step. Their passenger vehicles division, they have a really solid pipeline of new EVs and new ICE products coming. And to secure the batteries for all this, the broader Tata Group's company, Agratas, is building dedicated battery cell plants, one in the UK, one in India.
Agratas, right. That's a huge undertaking, building those plants. Will they actually meet the full battery needs for both JLR and Tata Motors in India? And, what about potential headwinds, things like geopolitics or those concerns around rare earth magnets we hear about?
Good question. So the AGM reports confirm these plants are definitely under construction, but they don't explicitly state if they'll meet the entire future demand. Not yet, anyway. That's definitely something to watch, how that crucial supply chain develops. And regarding the global complexities, yeah, geopolitical risks, potential tariffs like the ones sometimes discussed in the U.S., those are acknowledged challenges, especially for JLR. Now, the reports don't specifically detail strategies for, say, China's export curbs on rare earth magnets, but they do highlight broad mitigation efforts, diversifying where they source from, localizing critical parts, working closely with suppliers, building a buffer stock, the standard playbook for resilience.
A multi-pronged approach. Okay, yeah, makes sense. Now, beyond passenger cars, what about commercial vehicles in India? What's the long-term vision for electrifying those? And what's the buzz around hydrogen? Is that gaining traction for heavy transport?
Yeah, they see strong growth coming in electric commercial vehicles, or CVs, especially for things like buses and last-mile delivery vans. It's being driven by the improving total cost of ownership, TCO. Their future CV portfolio is really embracing a range of sustainable tech, not just battery electric, but also hydrogen fuel cells and even hydrogen internal combustion engines. And they take it a pretty significant step on hydrogen for long-haul trucking. There's a 2-year trial phase already underway. They're using 16 advanced hydrogen vehicles on major freight routes in India to check the commercial viability. It's a clear signal they want to lead that transition in heavy transport. Although the info we have doesn't give specific market growth figures for hydrogen yet, or say when it might become, financially significant beyond this trial.
So they're really exploring all angles for green trucking. What about market share in specific CV segments, like small commercial vehicles, SUVs, or buses? Are they gaining ground?
Well, the AGM materials indicate that commercial vehicle business has gained market share in trucks and buses. Electric CVs are definitely helping there, especially with buses and last-mile use cases. The small commercial vehicle segment, the SCV market, that did face some pressures, it seems. The overall strategy for CVs, as laid out, is about delivering profitable growth, but with less volatility, and exploring new opportunities. Now, specific current production capacity or utilization rates for CVs weren't detailed in the materials we reviewed, and no explicit future CapEx plans just for CVs were broken out, beyond the overall company commitments. But the strategic intent for growth is definitely there. 3. Financial fortitude and strategic investments.
Okay, let's pivot to the financials. JLR especially seems to be doing exceptionally well lately. What did the AGM meeting tell us about its financial health, the overall outlook?
Oh, JLR's performance is, frankly, remarkable. They recorded record profit in FY25. That makes it 10 consecutive profitable quarters. I mean, in this volatile market, that's a huge achievement. It signals real resilience, not just a bounce back. Their average revenue per unit, up 26% since FY21. It's now over £70,000 per vehicle. The Reimagine strategy delivered a profit before tax of £2.5 billion in FY25, and they hit net cash positive status back in April this year. So this strong performance really positions them well, even with global auto sales maybe slowing down and, currency swings, which, by the way, they actively manage using hedging strategies.
Right, hedging against those currency fluctuations. Smart. Hey, this all sounds incredibly ambitious. The EVs, the restructuring. The big question then becomes funding. How are they paying for all these huge plans? EV development, digital transformation. What are the capital expenditure projections looking like?
Yeah, the CapEx is significant. As of March 31st, 2025, they had contracts already signed for plant and machinery worth about 12,630 crores still to be executed, and another 879 crores for intangible assets, think digital platforms and things like that. But what's really notable is where that money's going. In FY25, 61% of their total R&D spend and 57% of total CapEx went towards tech that improves environmental and social impacts. So that clearly highlights the heavy investment in EVs, sustainability, and the digital transformation underpinning it all.
That is a massive investment. What about managing costs on the other side? Things like warranty claims, those can really bite into profits if they get out of hand.
Absolutely. And they did address rising warranty costs explicitly. Their provision for warranties stood at 28,080 crores as of March 31st, 2025. They're actively tackling this. They're adjusting the expected payouts based on historical claims, recent trends, but crucially, they're factoring in cost savings they expect to get from ongoing quality initiatives. It's a clear sign that quality and controlling those associated costs is definitely top of mind. Now, the specific issue of double engineering costs from trade restrictions wasn't mentioned directly in the materials we saw, but their overall focus on supply chain resilience and cost reduction through things like VAVE, value analysis, and value engineering aims to mitigate a whole range of those kinds of external cost pressures.
Okay, so what's the general outlook, the financial guidance maybe for the next 2, 3 years,
Yeah.
given this, complex global economic picture? And are they focusing specifically on foreign exchange earnings and expenses?
The overall tone from the AGM is one of resilience. Now, specific 2 to 3 year financial forecasts or explicit adjusted EBIT margin guidance for FY26 weren't detailed in what we reviewed, but their strategy is clearly designed to navigate these evolving global dynamics, particularly leveraging India's growth potential. They acknowledge market slowdowns, currency risks, especially for JLR, but they emphasize those hedging strategies to manage the financial risk from foreign exchange movements. It suggests a proactive stance, managing through turbulent times for the AI revolution and supply chain resilience.
Great. You can't talk about modern industry today without talking about AI, artificial intelligence. What's the company's strategic approach here? How are they planning to integrate AI into operations going forward?
AI and generative AI, they see them as presenting huge opportunities right across the board, from designing cars, building them, how they operate, even how they're sold. Based on the recent AGM, FY25 was really about building the foundations, a strong enterprise infrastructure, a data fabric, basically laying the groundwork to scale up AI deployment across key functions. The goal is real-time insights, more automation, more agility, and what's interesting is how practical they're being already. They've used AI for sales conversion, for example. They processed over 150,000 recorded customer conversations to help categorize leads, improve response times. Apparently, it's significantly boosted efficiency there. They also have 13 AI pilot projects running in plants focused on safety, things like monitoring if people are wearing their PPE, using video analytics to spot hazards. Even in investor relations, they've launched an AI bot to handle inquiries, so it's quite broad.
That sounds pretty comprehensive, touching a lot of different areas. You mentioned geopolitical risks earlier. How are they building resilience against potential supply chain disruptions, especially with, ongoing global challenges, potential tariffs, all that uncertainty?
Yeah, those geopolitical risks and potential tariffs are definitely acknowledged challenges. They particularly impact JLR's global operations and potentially margins. They're actively implementing, as we touched on, a multi-pronged mitigation strategy. That includes diversifying sourcing, not relying too much on one place, driving localization of components, both critical and routine ones, working really closely with key suppliers, building up some buffer stock to absorb any shocks. They also use financial tools like futures and options to hedge against price hikes for commodities. And they lock in long-term contracts where it makes sense, plus that continuous effort on material cost reduction through VAVE. It's all about building layers of resilience against those external pressures. 5. A sustainable future. Vision and workforce development.
Okay, looking beyond the immediate business and tech, what's the company's longer-term vision for sustainability, its broader impact?
Sustainability is clearly central to their whole strategy now. It's not just a side project. They've set targets. Net zero greenhouse gas emissions, GHG, for passenger vehicles by 2040, and for commercial vehicles by 2045. That aligns with India's overall 2070 net zero goal, and they're working towards this systematically. Continuous efficiency gains in operations, adopting those alternative powertrains like EVs and hydrogen, and really integrating sustainability thinking into every new product launch. They're also targeting RE100, that means aiming for 100% renewable electricity in all their operations by 2030, and zero waste to landfill across all operations by the end of the decade, too.
Wow, those are some really ambitious goals. Net zero, RE100, zero waste. Are they looking at other environmental aspects too, like, say, water usage or biodiversity?
Absolutely. It goes beyond just emissions. For instance, their plants in Lucknow, Pantnagar, and Darwood have achieved water-positive certification, which basically means they're putting more clean water back into the local environment than they're consuming in their operations. That's quite something. And they've started a big wetland conservation project across 4 states, studying around 1,800 wetlands to help conserve bird biodiversity and contribute to India's national wetland commitments. So yeah, it shows a pretty holistic approach to environmental stewardship, not just focused on carbon.
That's really positive to hear. And finally, let's talk about their people. Probably their most important asset, right? How are they preparing their workforce for this rapidly changing landscape? Electrification, AI, new manufacturing methods.
Yes, investing in skills is crucial, and they seem to recognize that. They're putting significant effort into skill development. Their future workplace strategy is specifically designed to give employees the skills they need, things like high-voltage systems for EVs, mechatronics for Industry 4.0 automation, auto electronics, vehicle communication. They mentioned over 1,350 employees are currently pursuing higher education in areas like AI machine learning and EV technology. They're also trying to build a future talent pipeline through full-time apprenticeship programs in these newer trades. And on diversity, they reported a marginal improvement in their overall gender diversity ratio, reaching 11.1% in FY25. They're actively implementing initiatives to boost representation for women and the LGBTQ+ community, and also making workplaces more accessible for persons with disabilities. Outro.
Wow, what an incredible deep dive. This company is truly operating at the vanguard of automotive innovation, it feels like, from these huge strategic demergers designed to unlock focused growth to this massive push into electrification and even hydrogen, and then leveraging AI across the business, building supply chain resilience, having a clear path to sustainability. It's clear they're thinking really big and definitely long term.
Indeed. They're navigating what is an incredibly complex global environment, but seemingly with a very clear vision for innovation and creating value. The emphasis on the reimagined strategy for JLR, plus that robust product pipeline for the India business, it really shows a strong commitment to future growth. It speaks volumes about their resilience, I think, and their ability to adapt and try to capitalize on these shifting global dynamics, especially leveraging India's growth story.
So thinking about all this, what stands out most to you? How might these huge shifts in a company of this size ripple through the whole auto industry? How could it reshape things? Everything from maybe our daily commutes to global trade patterns. What new opportunities or maybe challenges might pop up from these really bold moves? Thank you for joining us on this deep dive. Until next time, keep learning, keep questioning, and stay well informed.